Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom into these candles, you can see that we are still stuck in this range that I drew last week, where we have support down here from these lows, and we have a resistance point up here. And as I mentioned, until we get out of this channel, will probably stay in that sideways range for a while. Investors right now still waiting to see if we have any conclusion to this debt ceiling crisis. But until that happens, and I'll get to that in a moment, until that happens, I'm still keeping this upside target right there on the diamonds set at 339.80. And the main reasons why I'm still going higher on the diamonds is that we have two back-to-back hammer candles right at that support, and the volume has been dropping on that low. In addition to that, we have the CCI going up, and we have a conflict with the stochastic going lower. So while it's not extremely bullish on the short term for those targets, like I said, I still think we're going to stay in that range. So nothing has changed right there. If I go to IWM, you're going to see slightly different picture in that we are right at this moving average, and we have the middle of the range. We're right exactly in the middle of this range right here from this high and this low, and the oscillators are conflicting as well. There is a possibility that by the end of next week we could see that target at 177.02 hit, but again, nothing is extreme either way as we continue to trade in this range. Seems like a lot of nothing going on right now. As I mentioned over and over the months, we're more or less trading from one data point to the next, one CPI number, one PPI number, one Fed announcement to the next. And I think that there's no real fundamental news or information or data that's really pushing the market one way or the other in a significant trend. So that target is still in place. If I look at the Qs, ticker symbol QQQ right here, you can see that we have a slightly different picture here, where while we came very close to hitting my upside target of 327.61, today we have a bearish engulfing with what looks like to me a hanging man back to back to back, almost three hanging man candles in a row. And this is one of the charts that's showing a hinge lower on the stochastic and on the CCI. And not only that, but we have this negative divergence showing quite obviously here on the CCI. You see how the highs are showing lower highs on the CCI while the price highs are getting higher. So we're not really moving out of this range, at least not yet from what I can see. So I'm going to erase all these lines, and this is one that I'm going to project lower as we look for a possible pullback next week towards this moving average. Now remember, as the price is moving above that moving average, the moving average is being drawn up to the price. So my downside target is 321 to the mark right there. No pennies involved whatsoever, 321. So now we go to SPY. This is the S&P 500 ETF, and we have another bearish candle here, which is a bearish engulfing with a gap below the market. Again, we came close last week to hitting the upside target, but that is still in a range right there, range bound. I think the S&P could drop and start moving towards that gap fill down here. So my target for SPY is going to be 408.12. I can't make any big projections until we get out of this range, as you might imagine. And until that happens, I think a lot of investors are sitting tight. Investors who own stock or selling, maybe selling calls to collect extra premium, and that's what's keeping the VIX down. And that brings me to the VIX. If you look at VIX, something very interesting is happening here as well. We have very close to an inverted hammer, and I still have my upside target on the VIX at 2137, so that has not changed. But I want to show you this open interest that I've been talking about in the June option chain. If you look at the $30 strike price here, you can see the open interest on the $30 calls is now approaching 600,000. Again, something I've never seen in my career. And that is bullish for the VIX. Obviously, it's someone is hedging, an institution, maybe a group of institutions are hedging. But on top of that, I noticed that there's big open interest piling up in the 23 strike right there. Over 200,000 calls are still being held in an open account. And then you go to the 40s, that's 442,000. So the open interest is building. And if I go back to look at the chart, the 23 strike, where does that bring us? Not far away from this price high that I have back here with my price target again at 21.37. Now, before I get into what I want to talk about with the debt ceiling, I want to look again at the one-day VIX. If you put VIX1D, that's the ticker symbol for that, VIX1D, you can see that we are now forming higher lows. I mentioned that last week, but guess what? If we pivot up from this low here that we showed today on May 12th as I record this, if we pivot up, we have successively higher lows. So that's very bullish for the one-day VIX, and eventually I think that's going to impact the overall 30-day VIX. Right? We're still using this more or less as a comparison. And we finally have enough data to get a little bit of a mark here on our CCI. And you can see that we do have a very, very slight uptick. And if that CCI crosses over the zero line, the momentum line, it's going to be very interesting to see how that very first cross of the one-day VIX is going to affect the underlying price of that index. Now, the only geopolitical news I have for you is really I want to emphasize the importance of keeping an eye on this. This is the Bipartisan Policy Committee. They're projecting the X date, which is basically the date when the federal government will be unable to pay all of its bills in full and on time. They say it is most likely, now you have to watch the words they use here, it's most likely to occur between early June and early August of this year. Now remember, Janet Yellen was talking about June 1st as a date, and so the momentum is already building in this being what could be a worldwide catastrophe. Now, I don't want to go out there and shout that the sky is falling just yet, because there are emergency measures that can take place to prevent that from happening. But if the effects of this delay are already impacting us from here to here, remember, we're almost halfway through the month of May. We get into June, and then all of this starts to ramp up pretty quickly here. So this is going to be a very interesting story to follow. I'm sure that as we go on in the next couple of weeks, this is going to continue to build some press time and possibly shake up some of the investors that are the more long-term buy and hold folks. So for us, the option traders are doing very well. Next week, our option traders are going to be doing all the other rollouts for our spreads. I'm getting ready for our trip to Sonoma. So for those of you that are going to that, I will see you there. And with that, you have a great weekend. Take care. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here, and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.